Hey folks, welcome back to episode 12 ICT 2024 Mentorship. In this video, I'm going to explain my understanding as the way I have already explained in previous episodes. So don't forget to give me the thumbs up and don't forget to subscribe to my channel if you are new. Before starting this video, I would love to clear one word, and that is Jackson Hole Symposium. You will get this information from your calendar where you will see some kind of news around Wednesday, Thursday or Friday. By using those news, market is going to complete the TGIF. If you see that market has done this TGIF in any of these days, that means Wednesday, Thursday and Friday, any of these days, then you will treat that specific week as a non-farm payroll week, where trading is the low probability. Where is the highest probability is going to happen in Monday. Okay, so this is the information. You should write it down and you will look for that TGIF. What is TGIF? I'm not going to explain this by this specific video. Maybe in another video I'll talk about that TGIF. So in that specific moment, you will actually look for Monday for a better price action. I would love to complete one more thing just before going to the price action, and that is ICT is long-term bullish. So from his longer term, he is bullish. He is not looking for sell. If there is something happen that is not expected in the Middle East, the Israel, then Iran, Arab, those countries, some kind of war or something that is not expected. In that type of situation, ICT will start to look for sell for this relatively equal loss or sell side liquidity. Until then, ICT will look for the buy, and when you will take a long, he will use his extreme contract size for buy. But if he wants to look for sell, then he will use the lowest contract size to take sell. I hope that it's clear to all of you. Now let's go to the price action. Those information, please write it down because it's important. Over here, when market was around that area, then my ICT told that his first target is the min threshold of that specific order block. If it can go through this min threshold, then this high, and finally that specific volume balance. Let me show you this volume balance. This candle close and this candle close. See, this is a volume imbalance from daily chart. A perfect, nice volume balance. That was ICT's long-term target. Okay, so he was looking for that volume balance. At the same time, when I will be in lower time frame, I will talk about little bit about the PO3 that was explained by that specific video one more time with the live execution. The live example. Okay, this is the low. See, this is that line. That is the low of that candle, and this candle high. This is the sell side imbalance, buy side inefficiency. Keep that in your mind. This is the sell side imbalance, buy side inefficiency from daily chart. So this is that line high of that bearish parabolic gap. I'm going to my lower time frame. So this is my lower time frame, and let me just make it fixed. Okay, so over here. Now, what is PO3? Market will open here somewhere, then it will trade little lower. This is the opening. Sorry, let me actually mark it. I'm not a good artist, so I'm not good in marking. So opening, market went lower. That is the manipulation. Then the distribution. After the distribution, market will go little lower and it will close over here. This is ICT's PO3. If you understand this PO3, if you already got that specific word Jackson Hole Symposium, then you know in Monday you are going to get a huge run. And if you have already marked your daily bias, okay, not daily bias, actually daily target where market can reach for. As per ICT, he was looking for that volume balance. So that was his bias, that market can reach until that area. If you have that in your mind, then you will be able to catch a huge run, okay, long run. That buy is going to occur below the opening price, and you are going to hold it until 3 p.m. So you can see this is the 3 p.m. So where is 3 p.m. here? This is the 3 p.m. okay, 3 p.m. candle. So until that area, you will be able to hold your trade, and after 3, okay, around 3, that is the time to pay the traders. So you will actually try to take the partial, or you will try to close your trade after 3, because after 3, market actually try to make this type of lower move and then close somewhere here. So that high you will expect is going to create around 3 p.m. Yes, sometimes you can see that market actually went higher. That is also the algorithmic price turn, because market was seeing this high. Look at this high. Remember the daily bearish parabolic gap high, that was the liquidity level. So market actually went over there by using the algorithm around 3:45. I'll talk about that later when I'll be in 1 minute. But until 3 p.m. you will hold your trade below the opening. Then until 3 p.m. you will hold it. Then you will start to pay yourself. So I hope that this PO3 concept is clear, but I would love to clear it little bit more from 5-minute chart. I would love to show you that you will look for 930 candle. Okay, so this is the 930 candle, the exact opening price, the tick of the opening price around 930. Before this 930, no price is you should not focus on this price action. So after PO3, if you know market is going higher, then after 930 market went lower. See, it went lower. Take that low and that low, they are relatively equal lows. See over there, they are relatively equal lows. Market has taken that relatively equal lows. Market went higher. There was the institutional order flow entry deal. I'll show it when I'll be in 1 minute chart. That is your entry point. You are going to hold it until 3 p.m. Then you will start to pay yourself, or maybe you will take some partial. Then you will hold until that line. See this line? That was the liquidity line. Okay, and above this liquidity line, obviously this is the volume balance, which was ICT's last target. So PO3 930 open, you will start to look for your opening, not before 930. After that, if you are bullish, you will expect this type of lower move, and that lower move is actually the manipulation. It will take some kind of liquidity. As you can see, this low and that low, they are exactly clean lows. Market has taken that relatively equal lows, liquidity has taken, then market went higher. So you will try to catch the buy around that area. ICT actually refer Williams and Larry Williams, and as per ICT, Larry Williams doesn't feel confident to buy below the opening price. He actually wait for the expansion, then he is confident to take the buy after seeing the run. Okay, but ICT told us that below the opening price, that is the best place to buy if you know that where is your daily target. So where market is actually reaching for. Now I'm going to remove this one. I hope that until now everything is clear to you, because I'm just telling the point, just only the point, then nothing else. So over here, this is that 1 minute chart, and as you can see, this is the 930 open. Oh, where is that 930 here? This is that specific 930 open. Okay, then market went lower, went higher. This is the whatever it is, market is jacked the liquidity. All of the people who was trying to buy, they got stopped out. Then finally market went higher, and ICT told in his live that he wanted to see this will close above the new day opening gap. So this is your new day opening gap. It went above the new day opening gap, closed over there, used this new day opening gap as a support. After that, it has made this parabolic gap, and little bigger. So it has made this parabolic gap around that area. This portion he wanted to see unfilled. That is, some portion of this parabolic gap will be unfilled. And as you can see, this yellow box, this portion is absolutely open over there. Market trade that parabolic gap. This is called institutional order flow entry. You are going to take your buy from there, and you are looking for this buy side liquidity. See this buy side liquidity around that area. That is your buy side liquidity. A perfect setup over there. And if you really know where market is reaching for, then you are going to hold it until 3 p.m. So this is actually your 3 p.m. Where is that? Here. So until 3 p.m. you are going to hold it, and maybe you will take some partial over there, or you will close your trade. It's up to you. That was the thinking of ICTs. Now you are not going to simply to go to your chart and push your button to that institutional entry flow institutional order flow entry. What you are going to do in month and month, you should observe this type of entry. Then you will build your confidence. Then you will push your button. Don't just go to your chart and push your button because ICT told it is going to work. Please don't do that. First, observe it month and month, then build your confidence. No, this is going to work every single time. It's happening again and again and again. Then push your button over there. Okay. Otherwise, please don't push your button. Now, I would love to talk about the launch hour. As you know that market is going higher. By anyhow, you know that your daily limit. You know that market is reaching for that area from daily chart. Then around the launch hour, where is the launch hour is going to create at 11:30. So from 11:30 to 1:30 is your launch macro. Not before that, not after that. That is your launch macro. 11:30 to 1:30. Okay. So around 11:30, you will look. This is the 11:30 candle. Okay. You will look just before 11:30, the obvious swing low that should be created after 10:30. So sorry, not 10:30, after 10. So as you can see, this is the 10 candle. Okay, so here is the 10. This is the 10 candle. After that candle, there is a low, there is a low, there is a low. You don't care about them. You will look for the low has created just before 11:30, which is obvious. So as you can see, this is that low. Why you should look for that, and why you should think that market is going to take that on? Who is going to be profitable by that specific area, sellers or buyers? You can see that simply who actually took the buy, they are the profitable trader. So what they will do, they will put their stop loss below that low, which is just before the 11:30. They will put their stop loss over there. So what market will do, by using the launch macro, market will stop them out. So whoever is profitable by taking buy and they trailed their stop loss over there, they will be stopped out over there by that launch macro. Okay, so launch macro is going to fall if you know market is going higher again. Okay, then market will take this, stop them out. Whoever was buying, they will get stopped out. At the same time, it has traded this new weak opening gap, and you can see that it has traded this specific buy side imbalance, sell side inefficiency. It has traded that buy side imbalance, sell side inefficiency. Then it is waiting for 130. So around that 130, so let me actually show, around that 130, this is that 130, market will refer back what was happening around 11:30. So until 11:30, what was the bias? Bullish. So market is going to, and the algorithm is going to refer that same bias after 130. So as you can see, around 130, market started to go higher again, and until 3 p.m. So where is 3 p.m.? Here, until 3 p.m. market went higher. Okay, perfectly it went higher. The last macro, the last algorithmic run is going to create around 3:45 p.m. That is the time where market will finish its business if something is still untagged. That means it was trying to close that in sell side imbalance, buy side inefficiency, and market didn't close that liquidity. All of this gap, market didn't close until 3:45. So market will use that 3:45 macro to until the last of the day to close its business over there. So as you can see, around 3:45 market went lower, then boom. Where did it came? To this high of that sell side imbalance, buy side inefficiency. This is the highest high, and remember, this is the highest high, this is the lowest low. Let me show you the low. There is the low. Okay, so open, manipulation, hold a distribution until that high, then market went lower and then closed around that area. Stopped there, closed all of this sell side imbalance, buy side inefficiency, then closed over here. The very next day, market opened and trade that volume balance. I just didn't show it to you, but if you go to your chart, you will see that around 6 p.m. when the market opened, around 6 p.m. it explained higher and trade that volume balance. So that was the theme I have learned from ICT's episode 12. If it is helpful, or if it is actually understandable for you guys, don't forget to give me the thumbs up, and don't forget to let me know if you have any question regarding this episode. So until the next video, cheers.